December 16th, 2025. Let's see how many times the strategy came into effect today. Let's first refresh ourselves on one thing, which is the daily momentum. Let's look at the daily momentum. And how do you do that? What am I talking about? That means you look at the daily chart and then you just look at the MACD histogram. There's going to be periods of very low paused momentum. There's going to be inflection points where momentum is at its highest. There's going to be a lot of things you can read from the MACD on the daily chart. And then when you add in volume on top of that, I mean, you got some pretty clear indicators of what to expect. So for example, with the QQQ, with NQ, the past, week, we've been tapering down, building momentum, a lot of selling pressure. And then look at the volume rise with the tapering. Okay, this is exactly what you want to see with regards to edge, with regards to increased probability. So anyway, our market opens. Before our market opens, all we're left with is this data here. We've had our first flip over day. We've got a lot of selling pressure. That's all the data we've been given there. So now let's see how many times this strategy comes into effect. We got the market open right here. And the first thing, our first job is to align the 5-minute twins, the 5-minute regular hours and the 5-minute extended hours. So right here at market open, the first 2 minutes of the market, our 5-minute extended is going up. We're building momentum to the upside. And our 5-minute regular is got a lot of downward momentum. So these start to sync up and be in harmony and align. Okay, so now this one has flipped up. Let's see. This one's flipped up now. Let's check with the other one. Other one's already flipped up. That's good. So now these are both in alignment to the upside. So we look to see if we can find a volume confluence, a volume bar greater than the previous three, and that does not happen here. Do you see a volume bar greater than the previous three? No. And then we start moving down. So now we can't even take a trade to the upside anymore because we're now moving down on the 2-minute MACD histogram. We want all of these to be in alignment. These need to be aligned with this. And then we need a volume confluence. That's how you take the trade. All of these horizontal lines you see, these are just previous levels, important levels. The purpose of the purple lines is to show you the previous week's high and low. Notice how we're hovering today around the previous week's low. So that's what these horizontal lines are. They're all just important levels. Previous day low, pre-market high, things like this. So ignore those for now. Okay, back to the strategy. We don't get an opportunity to take a trade to the upside because by the time that the 5-minute twins align, which happens right around here, we are now tapering against that harmony, that alignment. So we don't take any trade because now we're going down. So we have to wait for the downward alignment to occur, which that doesn't happen until right here. We get a crossover on the 5-minute, confirming. The crossover on the 5-minute happened here, a little bit earlier, confirming. So now these are both in alignment to the downside. Now we need a volume confluence, a volume bar greater than the previous three. And that happens right here. Look, this one right here. That was the volume bar. 1 bar greater than the previous three on the right side of the momentum aligned with the 5-minute data. Your entry would be right here at the close of the candle. You would put your stop loss somewhere above that candle. You would target a 1-to-1 or a 2-to-1. And this was a loss. Took a loss on this one. I had this line here, and then I made a note to myself here because there were early entries that I actually could have taken that were not this strategy that I'm showing, but were different strategies, and those would have resulted in wins. But you know what? That is what it is. So now we have to wait for the 5-minute to give us clear signs. So we lost that trade. Now we pop back up. Do we get another downward? Nope. No volume bar greater than the previous three. That's a selling volume bar. So we just keep on moving along. And now look, the 5-minute is about to give us permission to take trades to the upside, which it does. It starts crossing over right here. And then this very next candle, aligned on the 2-minute chart, aligned with the 5-minute data. We have a volume bar greater than the previous 3. We enter this trade at the close of the candle. Put your stop loss slightly below that candle, target a 1-to-1 or a 2-to-1. And that was also a loss. 2 losses, 2 occurrences so far. I'm really glad that happened today, because losing in trading, first of all, the most successful book written on trading, the title of the book literally is Best Loser Wins. That's the title of the book, Best Loser Wins. And the reason is because trading is a game of probabilities. It's not a game of anything else. You get a strategy, you have rules. Those rules and that strategy is based on probability. And when you're playing a game based on probability, not based on your own willpower or your own worth or your character, it's literally just probability and following rules, which is discipline. So that's kind of your character. But where I'm going with this is the best loser wins means that if I have a good strategy and it loses 2 times in a row, like what happened today, if I can accept that and not get upset at it and just move on to the next, because it's just probability, I'm going to be a successful trader. I'm going to be a profitable trader because I know that, and because I live and I embody that knowing. Probability, following the rules, discipline, these are more important than making money. We go on to the next opportunity, which happens right here. No, not right here, actually. I marked this one because I wanted to talk about it. I took this trade. We were going down on the 5-minute. We were going down on the 2-minute. Those were in alignment. I didn't have a volume confluence, but I did take this trade, and it ended up being a win. Entry was right here at the close of this candle. Stop loss up here, targeted a 1-to-1. And, I'll be honest, I took the trade because I was kind of frustrated that I just experienced 2 losses. So, but just keep that between you and I. Okay, so we don't get a setup here because there's no power volume confluence that occurs. And this is a volume confluence right here. See this? 1 volume bar greater than the previous 3. Now, could you say that we should take this trade here? Is this a good idea to take the trade? Look at the 2-minute momentum. It's coming all the way. Now it's tapering. We have a little pop. So that would have been another loss had you taken that trade, had you taken that setup. And I wouldn't have taken the trade because this 2-minute is curling to the upside. Yes, that pop came. Yes, we had a power volume bar. But the 2-minute MACD, the histogram momentum, was not as clear and as pretty as I like. So we move forward. We get a crossover to the upside now about to occur. And we get a volume confluence right here on this next candle. Look at this, a volume bar. Almost greater than the previous 3. It's equal to the previous 3 or greater than, right here. We're on the right side of the 2-minute momentum. We've got the permission from the 5-minute. So you would enter this trade right here at the close of the candle. You would put your stop loss somewhere below that candle. Target a 1-to-1. You would have made way more than a 1-to-1. That was a good win right there. And then this vertical line right here denotes that the first 2 hours of the market is now up. First 2.5 hours of the market. And I don't like to trade the middle part as much. You can still make good trades. I just don't do it. I skip the middle. So we're going to skip the middle as well. And if you want to test out the strategy for your own back testing, you can do that. The last hour of the market is what I get active in, which is this line right here. So now we go to the second chapter of the market, the final portion here. And what do we see? We have a 5-minute, which is giving us permission to take a trade to the upside. Right here, we get a volume bar, which is equal or greater than the previous 3. But again, look how dirty this is. This is not very clean. We do get a pop up, so like the MACD comes down, 1, 2 comes down, boom, pops up. We get that volume bar. That's our confluence. 5-minute is giving us permission. I did take this trade, and entry would be right here at the close of the candle. Let's put your stop loss slightly below that candle. Target a 1-to-1. You would have made way more than that. Good trade right there. And do we have any other setups that come? Yep. We're building momentum now. Not tapering, that's not a good sign. You don't want to take trades during that. But now we've leveled, and we're now tapering to the upside. We're on the right side of the 2-minute MACD histogram right here. We get a volume bar greater than the previous 3. You would enter the trade right here at the close of the candle. Put your stop loss slightly below that one, target a 1-to-1 or a 2-to-1, and you would get the win. You would get the win. And then there was one last, I love taking trades in the last 10 minutes of the market. I love doing it. I'm addicted to it. It's fun because all of these algorithms turn on and the volatility goes insane. Look at the volume. You can see the volume. Look, market hour volume leading up to the last 10 minutes. Boom, last 10 minutes. Huge volume. And look at the setup that occurred. Our 5-minute is in the upside. It's not expanding, it's tapering. So that's a warning symbol, right? That's a warning. But look what happens right here. We get a volume bar greater than the previous 3. We started to come down, and then we popped up slightly. I know it's so hard to tell because it's so tiny. So small to see this MACD differential right here. We were coming down. We get that volume confluence, and we pop up right here. So that is technically a very weak setup. I don't advise it because the 5-minute is tapering down at this point, so that's a warning. But this is a good setup if you follow that rule. Power volume bar, we were going down, we had a pop up, we had some resistance. Your entry would be right here at the close of that candle. Put your stop loss here, target a 2-to-1, or a 1-to-2 rather. If you targeted a 1-to-1, you would not have got the win. A 2-to-1 would have got the win though. Either way, that was everything that occurred in NQ today with regards to this strategy. I hope you're having a good day so far, and I will see you in the next one.